Want to talk more about what the IEA's move really means. I'm joined by the CEO and Chairman of London-based business advisory MRL Corporation. Cornelia Meyer is also an independent energy analyst with experience working in more than 25 countries. So we're pleased to have her in the studio with us now. Thank you very much, for coming in. So was this the right thing to do on the part of the IEA? Do the supply fundamentals justify this kind of intervention in the market?
Absolutely not. It was the wrong thing to do, and it sent the wrong message. Because if you look at it, as you said, it's the third time. The first time was the first Gulf War. Well, that we had both Iraq and Kuwait, major producers, out. The second time was Katrina. The US is the third largest producer of oil. We had them out. Now, Libya is a piddly 3% of global oil production, and the Yemeni and Syrian production is about 1% together. So we are down 4%. Saudi Arabia is nicely cranking out oil. We really do not have a problem. It was unfortunate that the OPEC ministers didn't come to an agreement of getting the quota higher, but that would have been nothing more than psychological, because we are well supplied.
But I guess they would argue that, as the summer months get well underway, there is going to be more demand for oil, and then with Libyan oil, even though it doesn't account for a great deal of world production, 1–2%, as you quite rightly say, the fact that it's off the market would exacerbate the problem.
But where is the oil consumption really going to be high? It's in the US, with where the driving season is coming underway. Not so much in Europe, and Libyan oil is traditionally going to European refineries. So again, and with Greece and the southern rim of Europe being in the doldrums, there's a lower demand. So really, it's not a problem. If you look at the oil stocks, they're actually at pretty high levels.
So this isn't the right thing to do at this point in time. What do you think the impact will be? What are the prospects for oil prices in the coming months?
Well, we saw they went down quite significantly, about 7% or something. So that was quite something. But I think in the end, markets are inherently psychological, and we're really hyped up two things. We've hyped up the Libyan shortfall, and we've hyped up the non-agreement of OPEC oil ministers.
But isn't that something to be concerned about, because there was so much expectation, or the IEA had been saying for a long time OPEC needs to boost production, and the fact that you have ongoing turmoil in Libya, as you say, part of it must be psychological to soothe investor concerns, because actually there is so much uncertainty regarding the turmoil in Libya and whether or not it could still spread. That still could happen.
Absolutely. If you look psychologically at it, OPEC should have gone up. I'm pretty confident they will go up in their emergency meeting. But what you had this time in OPEC, you had about more than half of the ministers were first-time ministers in there. And that made it very hard to have any negotiation going. New people are less willing to make compromises because they're less secure in what they're doing.
So what are your expectations then for oil prices in the long run? Do you think, could we fall below $90 a barrel? Is that a possibility?
I don't think so. I think psychologically, as long as we have the turmoil in the Arab world, as long as we have the Arab Spring going out, and we really don't know which way certain countries are going, people will feel insecure, and therefore oil prices are in the 100 to 120 level probably for the next few months.
Just a quick one. How do you expect Saudi Arabia to react to this? Could certainly in the not so distant future, will they back away from any output increases? Could they even reduce production?
I think they may temporarily maybe reduce a little bit of production, but they will still be the ones there. Central bank of oil. They will keep us supplied.
Well, great to get your thoughts, your analysis. Appreciate taking the time to come into the studio.